Hey everyone, Couch Investor back to another video for today. So let's talk about Shopify. At the time of making this video, the stock is up around, more than 4%. So it really depends when you're watching this video. But why is it up more than 4%? Well, a bullish note from an analyst. So we're going to have a look at that, see the reasoning behind it. We're going to also look at the past analyst upgrades that happened the last couple of days. We're going to look at the graph at the end of this video because if you look at the technical stuff, some things might be happening, which should be a bit exciting. We're also going to have a look at the current state of the business right now. Remember, I don't own Shopify anymore. I explained my reason in another video. It's going to pop up in the top right corner. So if you're interested in all of that, maybe hit that thumbs up button, subscribe if you have not. I would really appreciate that. First things first, the state of Shopify. So this is the way the business looks right now. Has a market cap of just over $51 billion, revenues in the last 12 months of just over $5 billion. Then free cash flow, of course, has been coming down quite hard in the last couple of months, last couple of quarters actually. So it's now negative $200 million in free cash flow. Return on equity has also gone down. Gross profit margin has come down as well, and EBITDA as well. So that's one of the reasons why the stock crashed over 70%. Last year, basically profitability of the business went out of the window. Why are analysts turning a bit more bullish in 2023 despite recession fears? Well, because they feel that maybe costs are getting under control. We're, let's say, bottoming out and making our way back up when it comes to profitability, when it comes to growth, and just attracting more and bigger clients. Now, talking about those reasons, we're going to have a look at some of these analyst notes. But before we do that, if you want to support me and this channel, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. So let's start with the first one, which is actually two from the same analysts. He went from $33 to $36 and then from $36 to $39 not so long after. And that's an analyst at Loop Capital. So the first one, he kept a hold rating. Now, he cites that his quarterly survey of 500 Shopify merchants stating that he was generally encouraged by the results, particularly the sequential improvement in sales trends feedback and merchants' satisfaction. He adds he remains comfortable with his above consensus Q4 revenue estimates. And then he went from 36 to 39, still keeping the hold rating. So he says the stock historically traded at a significant premium to its closest comparable companies, but after serving as a pandemic darling, Shopify has substantially underperformed since the beginning of last year, while he further notes that the premium valuation on Shopify is no longer justified, particularly given its lower post-pandemic growth rates and profitability levels, as well as the management's aggressive planned investment on Shopify's fulfillment network. Which, if you're reading this right now, you really don't know why he raised the price target after giving that reason. But okay. Then we have a neutral rating and a 34 price target at D.A. Davidson. So the analyst states that he sees a long runway of growth for the company, though he prefers to get closer to a bottoming out of e-commerce growth before turning more positive on the stock. The analyst further states that the current trends towards travel, leisure, and value do not bode well for typical Shopify merchants, which warrants his short-term caution on shares. Next up, we have a price target raise at Truist from 35 to 41, keeps and hold rating on the shares. The analyst is adjusting his model with material reduction to merchant solution revenue, adjusted EBITDA, and free cash flow estimates for 2023. Though he is also incrementally constructive on Shopify's innovation investments in upmarket enterprise opportunity, the Shopify fulfillment network, and the stock's much more reasonable valuation. All right, this actually makes a bit more sense than the other analyst notes that we've read. And then the last one, and the reason why the stock is up, is from Deutsche Bank, upgrade from hold to buy. So the analyst there raised his price target by $10 to $50, which implies a 23.5% upside from where the shares of Shopify closed on Friday. He says many leading brands are now actively looking to migrate or are in the process of migrating over from legacy competing solutions, and we note this is in sharp contrast to our conversations over the last 12 months which consistently highlighted the pace of migrations slowing. He gave here two examples, Mattel and Supreme. He also said that the pace of operating expense growth is also expected to cool in 2023. Still, he said a deeper recession, more corporate spending, or Amazon's buy with Prime offering biting into the merchant base could all impact these expectations for the year ahead. Shopify is expected to report fourth quarter earnings February 15th. We're obviously going to cover that here on this channel. So of course he's bullish, but he's also wary of the risk attached to it, even though he says the stock can rally more than 20% as more brands migrate to the platform. Now, of course, when talking about analyst price targets, analyst notes, upgrades, downgrades, assumptions, etc., just take it with a grain of salt because like we've seen, the analyst price targets and, well, ratings do change whenever the price of the stock changes dramatically as well. We've seen that with Rivian, prime example. Remember 2021? I've shared that in my last video of Rivian. There's one analyst who had a $130 price target. Guess what? That same analyst right now has a price target of, if I remember correctly, around the prices we are today. So, like I said, sentiment follows price. Just keep that in mind. Of course, it's always nice to hear their thoughts, listen and read through their notes. Some information might be valuable. But hey, this video was purely to inform you on why the stock has gone up. Now let's have a look at the graph. So as you can see here, since the bottom in October, we've rallied around 62% or so. We already tested it once here at around $43. So we were already up 74%, came down to around $33 and then made our way back up over that 20 and 50-day moving average. Right now, pre-market, we're going to test those $43 again. Let's see if we can break through that. Now, if I'm zooming in again here, this is the 200-day moving average. We need another big green candle to break through this. Now, if we look at the RSI, we're still fine. We're at 52. If you look at the MACD, still bullish. Let's try and make our way over that zero line right here. That could happen probably when we have that big green candle over that 200-day moving average. Of course, with earnings coming up, expect some volatility here. And then for those that don't know, this is the weekly chart. So that's about it for this video. A quick update on Shopify and the moves, let's say, that we've seen with regards to the stock. Some more information with regards to analyst upgrades, etc. Hopefully this was helpful. Obviously, do share your thoughts down in the comments below. What are your expectations for Shopify this year? Let me know down in the comments below. Of course, we'll cover the earnings February 15th, so make sure to like and subscribe. And I see you all in the next one. Bye-bye.